Getting debt-free may help you before a stock market correction, crash, recession, or depression. If we ever experience a stock market correction or crash, or a recession or another depression, getting debt-free prior to something like that happening may help you. In my humble opinion, you don't want to be levered up with debt and have no emergency savings before any of those things possibly happen. Grab some popcorn and a drink and take this with a grain of salt. Today, I read an interesting article on Yahoo Finance, put out by Business Insider and written by William Edwards, titled "A Renowned Market Strategist Who Called the Dot-Com Bubble Warns U.S. Stocks Are at Serious Risk as Tech Analyst Optimism Starts to Sour." My friends, during the dot-com era, the NASDAQ dropped 76.81%. Imagine if we experienced a financial apocalypse like that today. Many of the high-flying companies today could react with layoffs. There would likely be ripple effects felt across the economy during such a financial apocalypse. Please understand, I'm not predicting a financial apocalypse. I'm just saying that I would sleep better at night being debt-free if something like that were to happen. But that's just me. And what do I know? I'm just some guy on YouTube with a gong. Now, the author of today's article referenced Albert Edwards, who is a strategist at the Societe Generale Group. I'm going to preface this information by encouraging you to read more about this gentleman. There are sources that describe him as an extreme equity bear. With that said, he has been skeptical that AI stocks in the U.S. could live up to the hype surrounding them. He published a note to clients last Thursday. He said, "If the rapid decline in analyst optimism for the NASDAQ 100 is anything to go by, the tide is going out fast." In another quote, he said, "In ordinary times, this would not be a serious threat to equity investors, but it is potentially a big risk when we are at nosebleed high valuations and optimism." I'm going to chime in regarding that last quote. This guy has been around for a long time. He is also famous for calling the dot-com bubble back in the late 1990s. I lived through that era. I can tell you that stocks can remain irrational for a long time. Just when you think they can't go any higher, they do. Greed is a powerful force. I remember the irrational behavior during the dot-com era quite well. Just when I thought stocks couldn't go any higher, they did. It defied all logic back then. That doesn't mean it didn't end badly, because it did. I'm going to reference the 1995 movie called The Usual Suspects to describe what eventually happened to greed back then. Toward the end of that movie, Verbal Kint, played by Kevin Spacey, was describing to Agent Kulian what happened to Kaiser Sose. He said, "The greatest trick the devil ever pulled was convincing the world he didn't exist." And like that, poof, he's gone. In that movie, Kaiser Soze got into the passenger seat of a vintage Jaguar and pulled away from the police station and disappeared moments before Agent Kulian put all the pieces together in his mind and ran out of the police station looking for him. But he was too late. In my opinion, that scene is synonymous with what happened to greed during the dot-com era. When the bubble popped, poof, like that, it was gone. Agent Kulian was too late when he ran out of the police station looking for Kaiser Soze once he figured out who he was. Well, during the dot-com era, many investors were too late once they figured out the stocks that they were holding were the same as Kaiser Sose, someone who supposedly didn't exist. Let me explain. In that movie, Kaiser Soze was described as a myth, a spook story that criminals tell their kids at night. Rat on your pop, and Kaiser Sose will get ya. Some of those dot-com stocks back then were supposed to change the world, but that was just a myth, like Kaiser Sose. A stock story told to retail investors. Miss out on buying this stock, and regret will get ya. Many piled their life savings into some stocks. Some even used margin. And then, like that, poof, their money was gone. I know people who lost millions back then. I know people who are planning to retire, but they had to go back to work for a very long time after the market crashed. So one has to wonder if the strategist Albert Edwards referenced in today's article is right. Is there a big risk to investors out there because of the nosebleed high valuations and optimism in the market? The author of this article says, most Wall Street strategists have bullish year-end price targets for the S&P 500. Well, here's my opinion for what it's worth. There were Wall Street strategists who were bullish prior to the dot-com bubble and prior to the 2008 Great Financial Crisis. I think there are a lot of risks out there in our world. We have the war between Russia and Ukraine. We have President Donald Trump implementing tariffs. We have tens of thousands of people exiting federal jobs, and government jobs have helped keep some jobs reports propped up in the past. We have a real estate market in gridlock. We have everyday people who are tapped out financially because of inflation and high interest rates that are crushing them. We have Warren Buffett selling his S&P 500 positions and building the largest cash pile in his company's history. We have the safe haven asset gold hitting new highs. We have automakers who are struggling financially. We have retailers who are struggling. We have discount dollar type stores that are struggling. And we have fast food operators who are struggling. When you take all of this into consideration, you have to wonder if you should believe the Wall Street strategists with bullish year-end price targets for the S&P 500. I personally am a bit skeptical. With that said, I've been around for a while, and I know stocks can defy all logic at times. They are often completely disconnected from reality. But that's just what I think. And what do I know? I'm just some guy on YouTube with a gong. There were quite a few comments beneath this article. I'll share some of them with you. The first commenter said, stocks go up, then they go down, then they go up. As long as you constantly call for a crash or a rise, eventually you will be right. Market pundits have no idea what is going to happen over the short term. Another commenter said, Trump made promises to lower prices of food and lower inflation, but since he took office, it's getting worse. Massive layoffs, cutting kids' lunches, Medicaid, veterans, etc., is not helping, and people are getting concerned. The next commenter said, us smart money guys have already moved our investment capital to Japan. Another commenter said, not to worry, Trump will fix it, right after he fixes inflation and gets America out of debt. The last comment that I'll share with you came from someone who said, stocks are overpriced and well above earnings. It's happened before and will happen again. Then you'll have a buying opportunity. Well, my friends, these commenters always have interesting things to say. Please always keep in mind, these are the thoughts of the commenters and not me. Just because the commenters share their political views, it does not mean they are my views. I'm sharing what I read with you. Now I'm curious, what do you think about all this? Share your thoughts in the comment section below. If you enjoyed this video, consider subscribing to the channel. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all my channel members. If you would like to become a channel member, there is a link in the description beneath this video. You can read more about the different membership levels. Please also check out some of the great books that I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.